The master swing trader Alan Farley. Most traders spend years hunting the perfect chart pattern, and then wonder why the pattern that paid them handsomely last month burns them badly this month. Alan Farley's answer is one of the most systematic frameworks ever written for short-term trading. A pattern means almost nothing on its own. The phase of the market around it decides whether it is a genuine signal or a beautifully drawn trap. Core thesis. Farley's foundation is the pattern cycle. Markets do not wander randomly, and they do not move in straight lines. They rotate through a repeating sequence of phases. Quiet accumulation at the lows, where patient money builds positions while nobody is watching. The breakout, where the base completes and price expands with force. The advance, the trending run everyone eventually notices. Distribution at the highs, where the same patient money hands inventory to the excited crowd. The breakdown, the failure at the top, and the decline, which carries price back down to the next accumulation. Each phase belongs to an emotion: apathy at the base, hope at the breakout, greed in the advance, euphoria at the top, denial through distribution, fear at the breakdown, and capitulation into the low. The chart is a map of the crowd's mood, and the phases repeat because the moods repeat. The practical consequence is the book's sharpest idea. Read the phase first, and only then look for the pattern. A breakout bought during accumulation is a high probability trade. The identical breakout bought during distribution is a trap wearing the same clothes. Amateurs hunt patterns in isolation. Professionals hunt patterns inside the right phase. Confluence or nothing. Farley's method rule is cross-verification, and it is blunt. No single piece of evidence is ever enough. The pattern must agree with the volume with the higher time frame with the level, and the level with the trend. When the inputs line up, the trade carries real probability. When they argue, the trade is skipped, however pretty any single input looks. The logic is statistical. Every input gives false signals sometimes. Breakouts fail. Oversold readings stay oversold, and strong-looking levels crack. But the false signals rarely coordinate. Genuine moves tend to announce themselves across several independent measures at once. So demanding agreement filters out most of the noise while keeping most of the signal. Osiris Capital Trading Desk holds the same standard before it backs any idea. It stacks the level, the tape, the larger time frame, and the character of the day. And when the evidence disagrees with itself, it simply stays quiet because a trade that needs an argument has already failed the test. The architecture of levels underneath every phase and pattern sits the chart skeleton: support and resistance. A support level is a price where buyers have repeatedly shown up with enough force to stop a decline. Resistance is the mirror image. The levels work because markets remember every trader who fought at that price last time is watching it this time, and their collective memory turns the number into a battleground. Farley's rules for using them are exacting: know your levels before the session, not during it. Respect a level more each time it is tested and holds, and respect it most when the test came on heavy volume. And anchor every trade to one, because a position taken in the middle of nowhere, far from any level, has no structural reason to exist and no natural place to admit it, is wrong. This is Osiris Desk's first job of every day before the open. It has already mapped the levels that matter: yesterday's extremes, the overnight range, and the prior day's closing price. It treats a level's history with respect, weighting the ones that have been tested and defended repeatedly above lines drawn on hope. A finite book of setups. The heart of the book is Farley's insistence that a trader should run a small, codified playbook of setups rather than improvising fresh ideas all day. His own 7, which he calls the 7 bells, each capture one repeatable moment in the pattern cycle. A pullback entry in an established trend. A tight coil of compressed volatility about to release a reversal candle at a meaningful swing, a gap that breaks a tired rally. A high-volume surge that commits the crowd. A failure at resistance after a weak bounce. A third attempt breakout through a level that is refused twice. The details matter less than the discipline. Every setup has defined entry criteria, structural stop, a target logic, and a minimum reward for the risk, all decided before the trade exists. If the moment in front of you matches nothing in the book, the answer is not creativity. The answer is no trade. Osiris Desk runs exactly this discipline with its own finite catalog of named setups. Every call it makes names the setup it belongs to. And when a moment matches nothing in the book, it says so rather than inventing one, because an improvised trade cannot be graded, repeated, or trusted. The dip trip and the coiled spring, two of Farley's setups, deserve a closer look because they teach the two great skills of short-term trading, entering trends and entering expansions. The pullback entry, his dip trip, works because established trends breathe, price runs, then retraces to a widely watched average, and the whole world's buyers are waiting there together. The discipline is to demand every ingredient. The trend must be genuinely intact on the higher frame. The pullback must actually reach the level rather than almost reach it. A reversal bar must print there, proving buyers have reappeared, and the entry goes above that bar's high with the stop below its low. So the market must confirm the idea before a single pound of risk is committed. The compression entry, his coiled spring, works from the oldest rhythm in markets, that quiet precedes violence. When range narrows bar after bar and volume drains away, energy is loading. The trade is to wait for the full coil, then take the first confirmed break in either direction with the stop just across the tiny range. The risk is small because the coil is small, and the reward is large because releases from genuine compression tend to travel. The whole edge is patience, letting the spring finish coiling instead of grabbing at the first twitch. Reading the violent bar, Farley pays special attention to the power spike, the bar that dwarfs its neighbors in both range and volume at once. That combination means serious participants have committed serious size, and it always means something. The question is what and context decides. A power spike erupting from a quiet base is ignition, the start of a move, and it should be traded in its own direction. The same spike arriving at the end of a long, tired trend is climax, the crowd's final surrender, and it warns of reversal. One bar, two opposite meanings, separated only by the phase around it, which is the book's core lesson compressed into a single candle. Time is part of the setup. The chapter most traders need and least expect is about the clock. Not all hours are equal, and treating them as equal quietly bleeds an account. The opening hour is directional and violent. The middle of the day is rotational and slow, where breakout trades go to die. The clops turns directional again as the big players square their books. Certain days and certain calendar windows carry their own reliable character, and some conditions, thin holiday tape and dead crossover hours among them, are simply not worth trading at all. The professional trades the windows where their edge lives and stands aside the rest of the time, and standing aside is a position. Osiris Desk trades time this deliberately for you. Its coaching lives inside the session windows where the edge has actually been demonstrated, the opening drives in London and New York and outside those windows. Its counsel is patience because the most expensive trades in any record are the ones taken to fill the quiet hours. The inner trader, Farley ends where every honest trading book ends, with the person at the keyboard. The framework is necessary and insufficient because a trader who knows the setups perfectly but cannot pull the trigger, or who fires at moments outside the book, gets none of the system's edge. The inner work is deliberate practice. Journal every trade, hunt your own patterns of deviation, learn the specific moments that break your discipline, and build counter routines for them. And the work never finishes. Under enough pressure, a drawdown, a bad night's sleep, a hard week at home, even experienced traders revert to their oldest mistakes. The mark of mastery is not the absence of error. It is the speed and consistency of the correction. Bottom line, the master swing trader is the operational manual of short-term trading. Phase first, pattern second, confluence, or nothing. Trades anchored to levels, drawn from a finite book of setups, taken only in the hours where the edge exists, and reviewed by a trader doing honest inner work. It is a complete system for turning chart, watching into a repeatable craft, and its deepest lesson fits in one line. Context decides everything. A serious trading career eventually rests on principles like these, learned once and then relearned under pressure for as long as the career lasts. Osiris Desk exists for exactly that, relearning, an advanced platform for trader development and disciplined trade management, and the flagship of Osiris Capital. It was built to make the relearning easier because Osiris Desk keeps this very book on hand for every session instead of trusting memory alone. It maps the levels before the open, matches each moment against a finite book of named setups, demands that the evidence agree before it speaks, and stands you down when the hour is wrong, until trading only the real opportunities is simply how you trade.